Okay, good morning, everybody. First of all, can somebody type on the chat if you can hear me okay, please? This is Stelios. Cayman and Ryan are out for the next couple of weeks. So what we're going to do, hello, Lucas, thank you. What we're going to do is myself and Steve, thank you, Oli, thank you. Myself and Steve are going to be here, maybe not every day, and we're going to be doing kind of a shortened version of the Flow Show just to keep people aware of developments in the markets overnight. Now, if markets are quiet, which I'm guessing they probably will be, this is August. This is the most the quietest and probably most illiquid month of the year. It could be the case that things are really quiet and we don't have too many of these flow shows while Ryan and Cayman are away. But we'll start with this one today. Just a very, is it only you or is my internet breaking? Could be. I don't know. We're going to have a quick rundown on what happened overnight and look at some markets. So let's see, Steve here. I don't see him, so I'm going to carry on my own. Let's go. Okay, so overnight it's been a pretty quiet session. We had a few things to talk about. First of all, Nancy Pelosi is she's kicked off a tour, an Asian tour. I think she has announced visits to Singapore, South Korea, Japan, and Malaysia. No mention of Taiwan, which is the the interesting place. If China have been very vocal, they've warned that they're not going to sit idly by with their military if she was to visit Taiwan. So there's some pretty strong words, and I'm sure she's aware of them. But anyway, that tour has kicked off. Nothing from the markets yet in terms of negative effects on that. Obviously, if things escalate, we're going to see it in the equity markets. But so far, it's been pretty quiet. Also, on the kind of global geopolitical environment, we have some tensions in Kosovo and Serbia. Remember, Kosovo declared their independence from Serbia some years ago, a decade or so, and there's some tension on the borders. But then again, also, nothing major yet, but things are kind of brewing a little bit. But that's just something to keep in the back of your mind. The other thing is we obviously have in the UK, we have the Conservative leader elections, the final leg of that. So you have Rishi Sunak and Liz Truss who are fighting for that, and Sunak announced a 20% income tax cut if elected. The usual thing, promises before the election, and then when you have to deliver, it's a different story. But in any case, a 20% cut in income tax, which starts from the lower level, is pretty significant. But as I've said before so many times, I'm finding it very hard to find bullish things about the pound at the moment. It's a difficult one. The Bank of England is meeting this week. They are expected to do 25, but frankly, with inflation at 9%, 25s are not going to cut it. So they should be doing more, and I think the chances are that I think the chances for a 50 are a lot bigger than the market thinks. I need to check the Sonia markets to see what exactly we're pricing, but I think we're pricing 25 fully, maybe a touch above. But let's remember the ECB delivered the 50 when the market was pricing 25, and I think it's I wouldn't say highly likely, but it's a serious scenario that this happens in the UK as well. That could be, for me, a reason for short-term bullishness in the pound, but overall in the UK, I'm finding it difficult to be bullish at the moment. So What else do we have to say today? Let's have a look at. Let's have a look at what economic data we had this morning. PMIs out of Europe. Overall, slightly worse than expected. Spain 48.7 versus 50.2 expected. Italian 48.5 versus 49.1. French marginal miss. German marginal beat. Overall, kind of slightly on the weak side. We did have also the Chinese PMI, which was a drop, and also the UK manufacturing PMI, which missed marginally by 0.1. So nothing in terms of data today. So far, we do have ISM PMI, manufacturing PMI from the US later today. And of course, we have the RBA and the Bank of England interest rate decision, the Bank of England being for me the most interesting one, because as I said before, there is a chance they do 50, and it would be very justified. Yes, the economy, just like the Eurozone, we said before, the economy is not doing terribly well. Leading indicators are flashing red, but you're left with high inflation. And as a central bank, when your mandate is to control price stability, you have to use your weapon to fight that. I mean, if you don't do it now, when are you going to do it? So we have that. And also we have on Friday the non-farm payrolls. And remember, economic data does matter a lot more now than it did before. The Fed has told us that. And if they're looking at economic data, we're definitely going to be looking at economic data. And given that they're no longer on autopilot, and they're going to be, the hikes are going to be determined by how data comes out, we have to be very, very vigilant on that. Remember, the market's pricing another 50 for the Fed for the next meeting, and another 50 by March, if I'm not mistaken. So still a little bit priced in, which could easily get wiped out if things start turning for the worse. Markets, not really that much to say. I always start with yields, and I must admit this 270 low was broken, and we closed below it for a second day in a row. So I think this is not a good, definitely not a good sign for bond bears. It looks like, I think Steve had a chart which showed, Blake showed we go down to 240 before we go higher. I think that's probably the most likely scenario now. There was some kind of, where was it? I think it was a channel, wasn't it? Let's have a look. Something like that. I can't remember exactly how he had drawn it, but he had it coming down to 240 and then back up. I think that could be the case, especially if we do get economic data which is worsening. We could easily have that little drop towards 240. Now let's remember the federal fund rates is at 250, and we have 10 years at 266. So that's a very, very flat curve, and we're also pricing cuts in 2023, and all that could obviously get repriced as we get more information, more economic data, and more data and more information from the Fed themselves. So yields are not doing anything, but I think this, and from what I remember, Bund is also pretty relatively flat today. So we must remember that technically we've had a break, and these two lows here, April and then May, they were taken out. And I think we're going to head towards, probably not towards 240. I still think there's another leg higher, because I simply don't think inflation has peaked yet. But that's a different story for the very short term. The dollar is weakening a little bit more, getting towards the 50 DMA, and also these previous highs could serve as support now. This is an interesting area we're getting to, but the bottom line is that the dollar has dropped from the highs, from well above 109, and that's supporting equity markets. The inverse correlation between the dollar and equities is still there, and that's supporting risk in general. The pound we talked about before. There is a chance that the Bank of England do 50. I think if that happens, we're going to be definitely testing 124, which is a big descending trend line from way above. Sorry, and that could be the case. But I think my favorite pair is the euro pound. I did close the long I had at a marginal profit, but I still think that if we wander into these low 82s, 83s, low 83s, high 82s, I think that's a really nice risk reward trade to get long there again. So I'm waiting to get in again on that. Otherwise, equity markets very, very very quiet again today. We had a very nice bounce ever since the Fed did that pivot. I don't want to call it a pivot yet, but they definitely changed the tune a little bit, and the market took that as very bullish for risk because this is the new normal. As things get bad, equities get bid. And so, we've been talking about 4,100, maybe towards 4,200. This is a very, very nice area as a risk reward short. But as long as the dollar keeps selling off, it's difficult to get in front of this. This has been a very impulsive move here. But if we get closer to somewhere between 4,150 and 4,200, I think I might have a go at that. The DAX, similar story, bounce from the Fed pivot. I keep calling it the pivot. Sorry, from the Fed meeting, and we're getting again into a nice little zone which could serve as resistance. Crypto is the same. Again, a little bounce, but really it's still not convincing. 50 DMA is being taken out marginally. We have to, if we do rally, I think the next level is going to be around 29 to 30K, which also should be, this is I think it's a fantastic area to be shorting into. But we're still a way away. This consolidation here did look quite bearish, and I think, frankly, if the Fed hadn't done what they did last week, I think we probably would be breaking down already. But it's given some good support to cryptos, and Ethereum is now coming into a zone which could be resistance around 1750. So yeah, not much else to say this morning. It's very quiet. As I said before, we have ISM manufacturing PMI expected at 52. That's down from 53. Also, ISM manufacturing prices expected at 74.3, down from 78.5. So we are expecting a little bit of easing on prices. Is this premature? Could be, but this is what the market is expecting. And what else do we have today? That's it for today. It's not. It's going to be a very quiet day. So if you're looking for excitement, I would probably go to the beach if you can. Let's have a look at metals as well. Gold. I think the whole world was looking at 1680, 1675, ourselves included. And we got down to 1680. We've been talking about 1680 for ages, and that was a really, really nice bounce. So this is what I had drawn. I obviously is not going to get there in a straight line, but I think metals have done well, and they have outperformed on the bounce. Silver, especially, for those who have been following, I got long at 1880, full size now, and this is very impulsive here. And let's have a look at the daily. So yeah, there is the 50 DMA which is coming up, which is also the 50% retracement. So this should be, and also a previous low here. This is an actually, where is that? Let me do that. This is a very, very important area, and I think there's going to be some kind of reaction here to the downside, maybe, and this is what 2050. So maybe we react from there. We go down to 20 again, and then we try to bounce back. But it will depend on the Fed. It will depend on economic data, non-farm payrolls coming. You name it. There's a lot of stuff happening. So that's going to be driven largely by that. And so metal is doing well. Platinum also doing a very nice bounce from a level of support that we had been talking about in the past. But yeah, so I don't have much more to say. I'm a lot less vocal and a lot less clever than Ryan and Cayman, and I think I will see you all on F.A.C.E in a few hours' time. Maybe we'll have another one of these flow shows with Steve as well, if he's here next time. Otherwise, we could go a couple of days without and maybe pick it up again on Thursday with the Bank of England. We'll see. We'll see how it goes. If there's data, if there's action, we're going to be here for you. Okay? So take care. It was a brief one, and we'll see you on F.A.C.E or later in the chat room. Thanks, everybody.